Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here as the Chief Executive Officer of Treasury Consulting LLP. And today we are going to cover a very interesting topic, which is how financial markets are moving after one day after the Federal Reserve has hiked the rate by 25 basis point. Previous to hike in the rate, the implied federal fund rates were 0.25%. Now this is 0.5%. And as we have saw the meeting that Janet Yellen was very aggressive and aggressive, not aggressive. In fact, she was very hawkish in nature, which clearly suggests that things are moving towards which clearly suggests that things are moving towards could be two times hike, maybe I would say in year 2017. And at the same time, I would like to stress the fact that the rate hike has divided the clans of economists into clan means the clan of the economists into two parts, and I'm on the other side of the clan. One side which Bill Gross, where Bill Gross is there, which continue to suggest that although the US deserves a hike, which US does, but they seriously need to have a look at whether the economy is in a good shape to have to digest the hike or not. On the other hand, I am on the other side of the client, which suggests that US economy needs at least 3 or 4 hikes if they really want to bring dollar back, because there is no doubt that dollar is losing its value, because the euro is getting down. Because why dollar is continuing to be a reserve currency, only because of two reasons. One, the US is one, the euro and GBP has not been able to maintain a position against dollar in the longer tenor of the game. And at the same time, we can clearly see that, which is right now on the screen, that GBP is trading at 1.24. On the other hand, euro is trading at 1.404. I think it is roughly somewhere, if I'm not wrong, roughly 2 or 3 p.m. in London. And I give in writing that by 8 p.m., when the London would wind up by 8 p.m., things would be very much haywire for the euro. And I might not be surprised that by January, when Federal Reserve would hike the rate again, which they surely going to be, because 1st of January, Donald Trump turning out to be an American president. I think euro is heading towards a parity. I seriously don't think that euro is a buy call now, but at the same time, we have a lot of referendums are going on, and we should not forget that the next 4 days are very important, because the Swiss National Bank, the Norges Bank, and Bank of England, all three have to give their statements towards their monetary policy. Today, roughly, I think 10 p.m. IST or something like this, we are going to get an opportunity to hear Thomas Jordan, who is who is acting as the president of Swiss National Bank. We seriously need to see that what Thomas think about it. In my personal opinion, I go by that, somewhere in I think in December 2000, somewhere in November 2016, when they met as a annual meeting of International Monetary Fund, Thomas Jordan clearly made a signal that he is seriously not interested in hiking the rate. Rather, he is seriously interested in decreasing the rate, provided that would stimulate the economy. Well, to be very honest, I'm yet to understand the logic behind that. I am not sure about the logic, but this is what the statement which has been given by the Thomas Jordan. So we need to appreciate this, because he's the president of the Swiss National Bank. On the other hand, if you look at this this screen, then we will get to know that things are a little bit fiery here, in the sense like all American allies like Swiss franc is 1.02, which is much high. Your so-called Canadian dollar, which is 1.33, which is again very high. But the very important thing we should talk about here, which is Japanese yen. Now this screen is a blinking screen, which suggests that market is into action. Now Japanese yen is trading at 117.82. I would treat this at 118. It is just a matter of time that when roughly 10 p.m. IST, the American session will start. Basically, the American session will start, and when the American session will start, then we seriously need to see how the things would move. I hope you refer our earlier videos, wherein I clearly mentioned that Japanese yen is a buy call at 115. Although in the same video we also suggested that Japanese yen is a sell call at 115, provided you are able to take the mark to market losses. So all the traders who are able to carry mark to market losses, they can simply afford to have Japanese yen as a buy call. So first they are going to sell at 115, and of course if they backfire, then it is a buy call. But at the same time, we also really need to understand that now Japanese yen is heading towards 122 and 125. Of course, there are a lot of political reasons behind that. They are holding a very good relationship with the upcoming president, which is Trump, and at the same time, they also pledged to invest close to $50 billion, which would generate roughly 50,000 jobs in US. And of course, US would surely reciprocate in terms of diplomatic policy or in terms of anything. I'm not sure, but you Americans, American President Mr. Donald Trump would surely would surely reciprocate would surely reciprocate. At the same time, I would like to mention that if you look at the earlier, like the straight pairs, the direct pairs across the globe, which is Aussie dollar and New Zealand dollar, they are getting down. Here, I fail to understand. Yes, I truly appreciate that Aussie dollar, New Zealand dollar, Euro dollar, and GBP dollar, they four are acting as a directs, global direct. On the other hand, rest all are indirect. On the other hand, if you look from the US point of view, then they are dollar indirects and other are dollar directs. So I would like to check one thing very sincerely, that there is a lot of volatility which is happening in the commodity, and we all know that now Russia and OPEC nation have joined their hand in terms of cutting the oil production, and Russia himself is taking the obligation of 5,80,000 million barrels, per day. And on the other hand, rest 6 lakh 20,000 they are giving to somebody else. The total is 1.4 million barrels, which really they are interested in cutting. I'm sure that the only purpose behind the same is to make sure that oil will reach to where oil was trading. So, in my personal opinion, that commodities would move up, but the only thing which I fail to understand after the Federal Reserve is that when commodities are expected to move up, why did Aussie dollar and New Zealand dollar falling? Euro and GBP falling, I can understand. In fact, GBP is also not fallen. GBP stayed at 1.24. So, from the last, I think 1 month, I think it is historical that GBP is maintaining a position between 1.24 to 1.26, which is very high. I have never saw that GBP able to consolidate its position between two or three big figures for a longer period of time. I always saw GBP movement of two or three big figures is nothing. It's a small thing for GBP. So I think that all the directs, which is Aussie dollar and New Zealand dollar, they would continue to appreciate nearby, and I would say that Aussie would depreciate and dollar would appreciate in that regard. So I might not be surprised that maybe 5 7 days or 10 days down the line, one Aussie could go to 0.70 also. On the other hand, I see that Euro will continue to head towards parity. Sitting today, it is 1.044. I think that probably by next 2 3 days, Euro would surely touch 1.03. I am not very much, optimist that Euro will not touch 1.03. I think after touching 1.03, we need to see that how the traders who are sitting in the US, how they are taking up. Are they buying Euro or are they selling Euro? And I think 1.03, if they sell Euro, which I think probably be the case because, because Trump is very much aggressive in nature, and he's really interested to carry forward the rates. And I think that Euro is heading towards the parity. In my personal opinion, if Euro will head towards the parity, then there would be a major catastrophe in the financial system, because a lot of information technology companies, foreign exchange traders, banker, foreign institutional investors, hedge fund, they are carrying us very solid exposure in Euro. And if 1 euro is equals to $1, then things would be very difficult for them. And I think this is not done. I think that this week is also very important because top three big, which is European Central Bank, Swiss National Bank, and Norges Bank, they need to take up a call in their interest rate. Like today, we had a call from it's a call of Central Bank of Hong Kong, and they decided to increase the interest rate. Although Federal Reserve rose the rate, and Hong Kong dollar is pegged, which is close to 7.78 to 7.80. Still, Central Bank of Hong Kong decided to move forward and wanted to increase the interest rate so that no major impact could happen between dollar and Hong Kong. So I personally think that Swiss National Bank would continue to be status quo. On the other hand, somewhere November 2016, when the Swiss National Bank President, Mr. Thomas Jordan, he was in New York regarding the International Monetary Fund annual meeting, he clearly suggested that he is not interested in hiking the rate. Rather, is seriously interested in decreasing the rate, provided there is some substantial benefit to this. So this is what from our side, and I think that currencies are going to be very very volatile in 2017, as Trump is going to be the ham at US. So I don't think that it is very easy for traders to decide which one to buy, which one to sell. At the same time, I would like to state the fact that the three or four parent currencies like Euro dollar, your so-called GBP dollar, Aussie dollar, New Zealand dollar, they are going to be highly aggressive in nature. I think 2017 is going to be a beautiful year for all traders, and they would make a lot of money. And with this, we will like to thank you very much for your time and effort for watching us. This is a live terminal, henceforth you can see the screen which is blinking. You're always welcome to connect with us at www.treasuryconsulting.in. My email is rahul.magan@treasuryconsulting.in, and my mobile number is 9899242978. You're most welcome to subscribe our magazine, which is a monthly magazine which cover derivatives, futures, banking, and other. This is 840 rupees per year subscription. At the same time, you're most welcome to subscribe our book also, which is coming in January 2017, titled Interest Rate to Tax Techniques to Hedge Your Interest Rate Exposure. With this, we would like to thank you very much and hope that next session over the period we would continue to bring a lot of videos to you. Thank you and have a great job ahead.